All right. Good evening, everybody. Hope everybody's doing well tonight. I'm starting early. I am going to record a. All right. Good evening, everybody. Hope Hold on, sorry, I'm playing myself here. Let me fix this chat. Yo, chat. Just making some changes. I'm using Rumble Studio. All right, yeah, so I'm starting early tonight. I wanted to kind of kill two birds with one stone and record a video related to the price of gold and what's going on with gold right now. And it's fitting considering we have our new partnership with Goldco. And I'll get into this. And its importance. So yeah, I want to play this video from a guy that Heresy Financial that I think is really, really good. He does a great job of explaining things. Then gets into why gold is important and what's interesting what the federal government is doing right now when it comes to gold and comes to Bitcoin. I'm a huge proponent of both of those things. Ray Dalio, billionaire investor, is saying that he believes that you should have 15% of your portfolio in gold and Bitcoin. 15%. That's a huge number, especially from a major investor like him. So check out our sponsor Goldco, and you can visit them by going to DennisLovesGold.com and get a bunch of free information there. That's all. There's no obligation or anything. But I think once you see this video, you're definitely going to want to learn more about it. Same thing with Bitcoin too. You can go to DennisLovesBitcoin.com. I have to update. In fact, I'll do that right now while people are coming in. Coinbase. When you download Coinbase, you can buy Bitcoin, and you can also get it in cold storage, which is really what you want to do. I'm going to make this the same heading one. Here we go. So there you go. DennisLovesBitcoin.com. If you go there, it will take you to the username and password for Coinbase. Just go ahead and create an account, and you can trade all kinds of cryptocurrency. You don't have to just trade Bitcoin, but for me, Bitcoin's the only one. But if you're into that kind of stuff, you can go do other things. But the federal government is now talking about this stuff, and like I said in this video that I'm going to play, it's pretty interesting. And so gold and Bitcoin are on the radar, and ultimately what the reasoning for this is because the government itself is losing confidence. They realize that the dollar is losing its value. And so, they're looking at alternatives as well and revaluing gold. That's what this story is about. So let's go ahead and get into the story. And again, this is Heresy Financial, really good guy when it comes to explaining financial stuff in a simplistic way.
You will not believe this, but the Federal Reserve themselves are now talking about revaluing gold. On August 1st of this year, straight on the Federal Reserve's own website, they published this paper titled The Official Reserve Revaluations, the International Experience. Considering the fiscal crisis that the United States is staring down the barrel of, with debt to GDP above 120%, a big steaming pile of national debt that is growing faster day by day, a spending problem that is getting worse. In fact, it's already 7% higher than it was last year, and a budget deficit that is also growing worse by the day. So this is interesting timing to hear the Federal Reserve discuss gold revaluation as a potential way to fix, at least temporarily, the problems with the budget. And it seems like this is the express purpose of the paper, with the first line being, with public debt at high levels, some governments have begun to explore financing additional expenditures without raising taxes, while also not increasing public debt outstanding. This is a very common thing that policymakers are looking for these days. We want to be able to keep on spending money, but we also know we have a budget that's about to blow up in our face. Are there any ways that are budget neutral that we can keep on spending more money? Now, for the average individual, heck, even a corporation or anybody who works in the real economy and cannot take money by force, this question is nonsense. The only way to spend money is to produce. And even if you borrow, you have to pay it back. But if you create money out of thin air and you can take it at the point of a gun, then none of that matters. Just spend your way to political success and leave all the problems for the next guy. So with the goal of increasing spending without having to tax more and also not having to borrow more, this article talks about using the proceeds from the gains on gold reserves. Now, the US has 261.5 million troy ounces of gold, and the current legal value of this gold is $42.22 per troy ounce. However,
which obviously is not the real current price now. And then he's going to get into explaining how they're going to revalue the gold.
The current market price of gold is over $3,300 per ounce. Now, the average person might look at this and say, well, why in the world would they not revalue the gold, or at least just constantly market to market? Because they have this gold, so by legally declaring that the value of their gold is only $42 an ounce, it means they're leaving money on the table. They actually do have more money than they legally say they do. So why wouldn't they revalue it higher? Well, it's because they're not actually going to sell this gold. It's not like, again, you or I, if we had a pile of gold saying, oh, it's only worth $42. Oh, it's actually worth $3,300. I've got more money than I thought I did. If I want to use that, I either have to borrow against it or I have to go sell it on the open market to produce the cash that I want to spend. Not so with the US government. In fact, if they were to just sell this gold, it wouldn't be inflationary. They could sell as much of it as they want on the open market, and they would receive the dollars in exchange for it from somebody else. And because there would be both a transfer of an asset going to one person and dollars going to the US government that the US government then spends or pays down some of its debt with, there would not be any inflation. Just like when you and I engage in a transaction. If I buy a car from you, that's not inflationary. Money is leaving me and going to you, but the same amount of money still exists in the system. And so sure, if the government wanted to actually take advantage of this, not only in a budget neutral way, but also in an inflationary neutral way, all they would have to do is just start selling some of the gold. They would produce the cash, taxpayers would get a break, and it wouldn't hurt anybody in the checkout line of the grocery store. So if they're not planning on selling it, what in the world is the point of gold revaluation? Hey guys, by the way, if you are looking to profit from this situation and everything going on in the world right now, then this Sunday, August 17th, 7 p.m. Eastern time. By the time you're watching this, it might be in just a few hours. I'm going live on Zoom with my asymmetric trading masterclass, and this is your last chance to register for the event. During this completely free masterclass, I'm going to be covering things like why the market is teetering on the edge of either a melt up or a meltdown. Number 2, how this could lead to massive volatility and whipsaws over the next few months. And most importantly, the number 1 strategy that I am using in order to profit from this and protect my wealth as it all plays out. I'm going to do a live Q&A at the end of the call. And remember, this masterclass is completely free, but it's starting very soon here. Spots are limited, so make sure you sign up right now by clicking on the link in the description below. Well, this paper from the Fed goes through a bunch of the different countries recently that have done gold revaluation and breaks it down into 3 categories. Method 1 is when the central bank's balance sheet increases the reported value of the gold reserves, which means their assets increase by the same amount, but also their liabilities increase by the same amount because those valuation gains are distributed to the central government's account. Now, if that makes no sense, don't worry, I'm going to explain it so simply because it's really not that complicated. They're just making it sound a lot more complicated than it is. But there's 2 other methods here that have been used recently. The second method is where there is a revaluation account itself at the central bank, and the change in value is then transferred to the central government. And then the final method also uses revaluation accounts, but it only changes the composition of the central bank's balance sheet and their liabilities, changing their profits and their losses. The only difference with this last one is that the change in value is used in order to help out the central bank's net losses rather than transferring profits to the central government. Okay, so what's the simple explanation that's going on here? Central bank has a piece of paper that says we have gold worth X amount of dollars. They replace that piece of paper with one that says we have gold worth Y amount of dollars. The difference, because there's a big difference, needs to be printed in new money. Methods number 1 and 2, they transfer that new money over to the government so the government can spend it. Method number 3, they keep that money themselves in order to offset any losses that they have. Some central banks around the world, it does actually matter the losses that they have, but because the United States dollar is the global reserve currency and the Federal Reserve controls the dollar, their losses don't matter. So in the case of the United States, either method number 1 or method number 2 would be used. Now, this is not the first time in recent history in which gold revaluation has been floated as a solution. In fact, right now in Congress, there is a bill that proposes revaluing gold. This is the Bitcoin Act. You can view this act at congress.gov. This is S.954. And as always, for some reason, with bills proposed in Congress, it's always an acronym. In this case, Bitcoin stands for Boosting Innovation Technology Competitiveness Through Optimized Investment.
But at the same time, Bitcoin is involved in this, so it is a little bit confusing. But he'll get into it, and I'm gonna have to research some more of the stuff.
Nationwide Act of 2025. I don't know why they always have to do that. But if you scroll down to Section 9 for offsetting the cost of the strategic Bitcoin reserve, Section C, you can see that it states that not later than 120 days after the enactment of this act, Federal Reserve banks shall tender all outstanding gold certificates in their custody to the Secretary. Secretary would be of the Treasury in this case. Not later than 90 days after the tender of the last such certificate, the Secretary shall issue new gold certificates to the Federal Reserve banks that reflect the fair market value price of the gold held against such certificates by the Treasury, as of the date specified by the Treasury on each new gold certificate. Upon issue by the Secretary, each Federal Reserve bank that receives a new gold certificate shall remit the difference in cash value between the old and new gold certificates to the Secretary for deposit in the general fund within 90 days.
So they have to pay the difference. Upon issue by the Secretary, each Federal Reserve bank that receives a new gold certificate, so if it's $3,200 for the new one, they have to remit the difference between the $3,200 and the original, which is what, around $42.
What does that mean? Very basically what we just said before. Right now, the US Treasury owns all the gold. However, they didn't get that gold fair and square. In fact, it was a long history of decades of confiscating that gold from the world and from American citizens. And before that, it was actually the banks and the Federal Reserve themselves that held that gold. And so when the United States in 1934 confiscated gold from Americans, they had to swap something in its place. So when they took the gold from the Federal Reserve and the banks, they exchanged it for gold certificates that said, hey, now you have a piece of paper that says it's worth a certain amount of gold. And the banks and the Feds still have these papers, these gold certificates today. And they say that the gold is worth $42 an ounce. So this Bitcoin Act proposes that the Federal Reserve will need to exchange all of those old gold certificates that have the old price listed on them for new gold certificates that will have the new gold price listed on them. However, the Federal Reserve just operates a digital balance sheet and they print money out of thin air, but it still has to take care of its accounting. And what that would do is it would show a large gain with no offsetting costs to acquire that gain. And so in order for things to stay neutral on their balance sheet, they would have to come up with the cash difference between the old price of gold and the new price of gold. In other words, I have a piece of paper that says 42 on it. I don't know if you can see that. It says 42 on it. I give it to you. I'm the Federal Reserve. You're the Treasury. I give you a piece of paper that says 42. You say thank you. In exchange, I would like to give you, you're giving this to me, a piece of paper that has the word 3,300 on it. And I get it from you and I say, thank you. I like this 3,300 better than the 42 that I had before. But you say, wait, you have to pay for that. So now I have to give you $3,258 for the privilege of having this paper that says 3,300 on it instead of the one I had before that says 42. This is why the term budget neutral is thrown around for gold revaluation, because budget in this case refers to the amount of taxes and the amount of borrowing that the US government does for its spending. Gold revaluation, where they just declare, okay, Federal Reserve, the gold that you have is now worth more, or the gold certificates you have are now worth more, so you have to pay us the difference for it in newly printed cash. That means the United States Treasury will get like $1 trillion out of nothing. Depending on the day, the exact amount is like $962 billion or something like that, but let's just call it an even trillion. Now, make no mistake, this is printed money. It makes no difference whether they do this for the real market value of gold, whether they do this for half the price of the market value of gold, whether they just declare gold is $10,000. It makes no difference. This is simply a legal declaration and an accounting gimmick to print money to inject into the Treasury so the government has more cash to spend that doesn't come from borrowing and doesn't come from taxes, which means because it's money printing, it will cause inflation, or at the very least, it will be inflationary.
So the point is, why even bother? I mean, I guess you have to, increase and mark to market the gold, but in reality, they could just do this anyway and just print the money, and it's still going to be inflationary. So it's not really going to make a difference. That's what's crazy about this, is how the government can pretty much do whatever it wants, and and of course, if any of us want to do something like that, we can't. We still owe, we still have to pay. It's ridiculous.
Having a higher pressure up on prices than there would be otherwise. Now, specifically with this Bitcoin Act, it says that all of that $1 trillion or so would be used to purchase Bitcoin within 5 years. However, the Federal Reserve's paper on gold revaluation makes no comments on the use of the new money printed from gold revaluation. It simply talks about it as a method to create budget neutral spending. Now, you might be thinking, I thought I just saw Scott Bessent on TV saying they were not going to buy Bitcoin. And
this is true. He did actually say that they were not going to buy Bitcoin, and this was last week.
You'd be right. In an interview with Fox Business on Thursday, Treasury Secretary Scott Bessent said about Bitcoin, we are not going to be buying that. That means as far as it is up to him and the executive branch, they're not going to be outright purchasing Bitcoin. But you have to understand, this has nothing to do with the Bitcoin Act. And if Congress passes that act, which they probably won't, but if they do, then the Treasury will be directed to do this. They will have to. But After Besant made those comments on TV, the price of Bitcoin collapsed like 6% in just a few hours. And then he went on Twitter to clarify and said, in addition, Treasury is committed to exploring budget neutral pathways to acquire more Bitcoin to expand the reserve. Budget neutral. Where have I heard that term before? Oh yeah, from the Bitcoin Act and the gold revaluation paper from the Federal Reserve. Now, if you're sitting there thinking, man, this would be entirely unprecedented, whether they revalue gold just to have $1 trillion more in spending power, or they revalue gold to buy Bitcoin, I can't believe something like this is even being seriously talked about or proposed. Well, guess what? US has done it before. Have you ever looked at a long-term chart of gold and then you zoom in before 1971 and you can see the price of gold was $35 per ounce. And you look before that and you can see that prior to 1933, the price of gold was like $20 an ounce. Interesting. If the price of gold was legally declared by law, why was the price of gold changing? Gold revaluation in order to print more money. Good job, you guessed it. If you look at the Gold Reserve Act of 1934, most Americans remember this as the act where FDR stole all of the gold from American citizens. Or as the Federal Reserve likes to put it kindly, the act transferred ownership of all monetary gold in the United States to the US Treasury and prohibited the Treasury and financial institutions from redeeming dollars for gold.
There were a lot of people that did not give up their gold too. But yeah, this was a crazy time where people had to give their gold up to the federal government. Pretty scary when you think about it.
Gold. Now, before this, if you had dollars, it said on them redeemable for gold, because that's what the dollar was. It was just a gold certificate that at any time you could take it to the bank and you could get your gold for it. And the price of gold was legally $20.67 per ounce. Now, there were legal limits on how many paper dollars could be printed to put out into circulation, because if there were too many, then there would be a bank run. Everybody would go turn in their paper to try and get gold from the bank, and there wouldn't be enough. This is the problem with a central bank and with fractional reserve banking. Money is fraud. And so there were legal limits on how much fraud could be committed across the system overall. And so if you're a president that likes to play fast and loose with the rules and ignore the Constitution, you're going to want to find ways to spend more money, especially if you can do it through printing more dollars. What better way to do that than legally declare the value of the gold is a lot higher? Because now that raises the limit on how much paper you can print that is backed up by that gold. And so that's exactly what FDR did. After he confiscated all the gold from Americans and gave them $20 in paper per ounce, then he raised the price of that gold to $35 per ounce and was able to give the US government a nice boost in cash spending power as a result. And so gold revaluation in order to boost spending power in a budget neutral way has a long history across the world and in the United States. It would not be unprecedented whatsoever. The only question would be, what is the money going to be spent on? And given the fact that we are $37 trillion in debt, and year to date we've already spent $1.6 trillion more than has been taken in taxes, to be honest, an extra $1 trillion coming in to the federal budget through some printing is not going to make a dent. They're not going to be able to pay off the debt with it. They're not going to be able to run a surplus. And I would bet anything that they're not even going to slow down the spending. It would just add to the spending to boost those grocery and gas prices. Don't forget, this Sunday evening, 7 p.m. Eastern time, I'm running my asymmetric trading masterclass. It's completely free, but spots are limited and it's coming up quick here. So if you want to attend, make sure you click the link below and sign up now. As always, thanks so much for watching. Have a great day.
Okay, so that's a pretty crazy thing. And, you know, with Scott Bessent saying that the U.S. government's not going to buy Bitcoin, this is wild, because, you know, when he's talking about this, he's saying, well, they're just going to print money in order to pay for the revaluation of gold. This is sort of a temporary thing that they're doing. So let's kind of get into the revaluing the gold. So right now the valuation is $42.22 an ounce. It's an accounting relic from Bretton Woods back in 1971. It has nothing to do with the market price. So the market price of gold currently is $3,300 an ounce. So if the U.S. revalues its gold to match the real market price, it would mean changing the balance sheet value of 261.5 million ounces of gold that it's held at Fort Knox. And you remember there was going to be an audit that was supposed to be done at Fort Knox to find out how much gold was in there. Now, I don't think they've done it yet. This was still when Elon Musk was friendly with Donald Trump, and they were kind of going back and forth with this. And I don't think they've ever done the audit. So there's some people that are saying that there might not even be any gold right now in Fort Knox, which would be hilarious. But the impact on the government at $42 an ounce, the gold reserves are valued at $11 billion. But if they change it to $3,300 an ounce, the reserves would be valued at $860 billion approximately. So this would strengthen the government's balance sheet, making the U.S. debt look safer, but it wouldn't change the physical amount of gold. Of course not. Now, the impact on the price of gold by revaluing the U.S.'s gold. The market already prices gold at $3,300 right now, so if the U.S. just updates its books, it will not magically push the market price higher. However, such a move would be a huge psychological signal that the U.S. acknowledges the dollar is weaker and needs gold to backstop confidence. So that's maybe why they're doing it, partly. That sign could easily drive new global demand, which might push gold above $3,300. But I think really the important thing really is what's talked about here is psychological, where there's weakness in the dollar. Think of it as a vote of no confidence in fiat money, which usually makes gold run higher. So if you're an investor in gold, the revaluation doesn't change your holdings directly. An ounce of gold is still worth the same in the open market. But the benefit is indirect. It could trigger a new bull run if global investors pile in. It could lead to higher premiums on physical gold, so coins, bars, and demand spikes. And if you're on the sidelines, a revaluation announcement could signal that it's not too late to own gold as a hedge. So you're hearing so much more talk even before this announcement about gold. Like I said before, Ray Dalio and others are saying, look, with what's going on with the dollar and all the printing of the money that's going on and the shakiness of the dollar, that gold and Bitcoin are looking a lot more attractive right now. U.S. gold revaluation equals an accounting change and psychological shift. It doesn't instantly reprice gold, but it certainly would accelerate gold's rise beyond $3,300 because the market would interpret it as if the U.S. is admitting the dollar's fragility. For regular investors, the upside is likely more gold demand worldwide and therefore higher prices over time. So to sum it up regarding gold, if you buy gold today at the market price of $3,300, a U.S. revaluation wouldn't hand you an instant windfall. However, it would reinforce your bet and likely drive prices higher in the years to come. And that's why I think having gold in the portfolio, in my opinion, and what I'm doing is important. And that's where Goldco comes in. This is where Goldco, you are able to take money in your 401k and transfer it into physical gold. And so this is, to me, is huge. And then the Bitcoin Act is something else that he had mentioned. Get into that here in a second. So the Bitcoin Act of 2025, introduced by in the Senate by Senator Cynthia Loomis, Republican, Wyoming, on March 11th, seeks to turn the executive order from March creating strategic Bitcoin reserve for government-held BTC into permanent law. It aims to legally establish a strategic Bitcoin reserve, a decentralized network of secure, geographically dispersed storage facilities tasked with long-term custody and key management of government-held Bitcoin. This is another thing. So I've been saying this now for a long time, gold and Bitcoin. Codify transparency measures like quarterly, quote, proof of reserve reports, which include cryptographic attestations and third-party audits overseen by the Comptroller General. Mandate the consolidation of all federal agency-held Bitcoin into this centralized reserve, preventing sales or encumbrance. Bitcoin Purchase Program. The Act proposes a structured acquisition plan. The U.S. Treasury would purchase up to 200,000 BTC per year over 5 years, with a total cap of 1 million BTC. A massive commitment to digital gold. They're even calling it digital gold. These coins would be held in trust, stored in the strategic Bitcoin reserve, and locked in for at least 20 years, with only up to 10% release allowed every 2 years after the holding period. Forks, airdrops, and oversight. The Act also covers management of Bitcoin forks and airdrops, requiring all resulting digital assets, for example, new coins created from forks, to be accounted for and stored and not disposed of within 5 years unless explicitly authorized by law. Oversight measures similar to the gold market, audited reports, third-party verification, and regular reviews by the U.S. Comptroller General for full transparency. This mirrors a gold conversation that we had mentioned before. So, just as the U.S. gold revaluation sends a strong signal of acknowledging low confidence in the dollar, the Bitcoin Act also kind of signals that the government endorsement of Bitcoin as a store of value, along with gold, means there's trouble ahead. Institutional backing and long-term strategic allocation that could fuel legitimacy, institutional demand, and wider adoption. So this news is pretty huge, and I'm going to continue to do more talking about it because the government getting involved in revaluing gold and getting involved in purchasing Bitcoin. This I kind of just started reading about today, and so this is pretty huge news to talk about. So I'm going to end the stream. Thank you all for showing up tonight, but that was the one story I wanted to go over and discuss. And like I said, I'm going to do more kind of, this is somewhat complicated and more complex, so it's probably better to kind of break it up into smaller bits to make it a little bit easier to understand, but that's definitely what we're going to be doing. So thanks for visiting. Thanks for being here on a Sunday night. We'll see what happens later on. Might come on later, but appreciate you guys that were showing up here tonight to go over the Bitcoin and gold.